Good afternoon, everybody. My name is Orla Burke. I'm chair of the Electrical and Electronic Division of Engineers Ireland. On behalf of our division and my fellow colleague, Padraig Plunkett, who's on the panel today, I'm delighted to welcome you all to this event, analysing the impact of COVID-19 on the Irish and European electricity market. I'll take this opportunity to inform you all that we have another upcoming event on the 12th of February at 1 p.m. And that is a free lunch and learn with Brendan Dervin of Best Training. And that's on the national rules for electrical installations. So you're all very welcome. Please keep an eye on the Engineers Ireland website on the event section, and you'll find more details of that event and how to register. So without further ado, I'm just going to give a brief introduction to today's event. We're delighted to be joined today by Fergal O'Donnell. Fergal O'Donnell is an electrical engineering graduate of University College Cork. On graduating in 2005, he worked in the finance area before joining ESB, working in energy trading and risk management for 8 years. Fergal is one of the founding members of Erova Energy, and Erova Energy is one of the largest independent energy trading and services company in the Irish and UK markets. Areas of expertise include trading, power and associated products, asset background trading and imbalance optimization for renewables and flexible assets, analytics, market intelligence, and energy trade risk management solutions. So we're delighted to, as I said, welcome Fergal today to take us through his presentation. There is a Q&A function at the bottom of your screen, so you're very welcome to enter your questions in there throughout the presentation, and we'll take them at the end, time permitting. So without further ado, over to Fergal, and thank you in advance.
Thank you, Orla. I have to say I feel a bit of an engineering fraud amongst all of you engineers. I qualified in 2005, but I never worked in industry. So initially, I'd like to thank you all for logging on today. I've kind of divided this presentation up into 4 parts. So initially, I'll give you an overview of impact on the demand in terms of COVID. Also, then that'll feed into how that impacted the prices across Europe. Then finally, I'll look at how that impacted our day-to-day operations as energy traders. And then there's a couple of brief slides at the end, so I'll give it an overview of the electricity sector going forward. So initially, the first slide here is just a brief company background. So as Orla mentioned, we're independent energy traders. We've currently 4 offices, although I must say even the word office feels almost archaic at this stage. Our head office is in Dublin, so we also have small offices in London, Cork and Amsterdam. We were founded just over 6 years ago now, 2015. We had a rich enough energy trading background there were 4 founding members, 3 traders and one IT expert. Our backgrounds included ESB, Borgas, Centrica, Gay Electric, SSE. So we were, it wasn't our first rodeo. So since starting in 2015, we've grown pretty rapidly over the last 5 years. Initially, we started trading on just interconnectors across the Irish Sea, so on EWIC and Moyle, and then we expanded into GB trading, and then after that into the continental trading. In the last couple of years, we've slightly changed strategy again. Now we're more asset-backed traders, so we trade on behalf of wind farms, solar farms, small generators. As Orla briefly mentioned, there our areas of expertise are trading power and associated products, so electricity, gas, carbon, asset-backed trading, in that we trade for wind farms, solar farms, gas turbines, batteries. We also provide analytics and market intelligence as third-party services, and also energy trading risk management solutions. So we're founded in 2015. In 2018, we welcomed outside investment in the form of a share sale to Mitsui & Co. This had a twofold effect. It had the impact of adding cash to the company, just from a funding perspective, but also in terms of creditworthiness. We trade with a lot of international trading houses, and having a strong partner in the shape of Mitsui really made us a far stronger credit proposition And as I mentioned, we've grown pretty rapidly over the last 5 years. We've become one of the largest and most profitable independent energy trading companies in the UK and Ireland. And as of the most recent top 1,000 Irish companies, we rank at number 415. That's just a brief overview of company background. Next slide is just a business overview. So our core business, as I mentioned, is offering trading services to wind farms and solar farms across Ireland and the UK. A lot of these wind farms might be owned by funds or smaller generators who would not have the trading capability to be able to manage their fleet. So we offer these services on 24/7 basis. As I mentioned, primarily wind in Ireland and solar in the UK. We have an internal bespoke trading platform, which allows us to offer best-in-class energy trading solutions at the most competitive rates. I would, in terms of my own role, I'm the director of trading. I would broadly trade our Irish wind portfolio. It's 24/7 trading, but we're paid. We've obviously a shift team behind us working on this constantly. We are recognized experts in the market in terms of short-term trading. That includes day ahead to spot, intraday, and cash out optimization. In terms of the services that we offer power purchasing agreements. That would be might go to wind farm and take their output for a certain price or for a fixed period. We offer smaller suppliers a route to market service. We offer interconnected trading as a hedging solution to some suppliers. Imbalance management, as I mentioned, for wind farms, trading of renewable certificates. Also offer trade analytics, renewable forecasting from our own internal renewable forecasting model, and risk management solutions. So we've developed a portfolio of up to 700 megawatts of wind, solar, and flexible assets on the generation side. On the other side, we deal with a lot of smaller suppliers in the downstream sector. We find with the bigger suppliers, they have quite onerous credit terms. So the smaller ones are a little more agile like ourselves, and we currently serve Irish and UK suppliers at peak demand of nearly 250 megawatts. So between the generation on the one side of our wind farms and solar farms, trading in the middle, and then the suppliers on the other side, we've kind of developed a vertical integrated utility. So in preparation for today's presentation, I was just digging back through my old emails to find when was the first mention of coronavirus I could find. And I was somewhat surprised it was actually this early that we get daily energy email updates from various analysts. So on January 23rd, 2020, so just over a year ago now, you'll see a market update there that crude prices fell over 2% on Wednesday, amidst worries of the outbreak of a coronavirus in China that could morph into a pandemic. It was actually pretty accurate, really. I mustn't have been paying too close attention that day because I can't recall it. I was more worried about what wind was doing, I imagine. So you fast forward 3 months to April, 20th of April, and you'll see there that the price of WTI, the benchmark for US oil, fell to minus $37 a barrel. So that's quite a shock to the system in terms of the oil market and general energy market, which will broadly follow the oil markets. So firstly, I'll look at the impact of COVID on the Irish demand curve. So the graph on the right-hand side would show an average day in April in 2019 compared to 2020. So obviously the difference there is pretty stark. You'll see a major fall in demand across most of the day from 7 a.m. through to 11 p.m. Overall system demand was reduced by 11%. The residential usage, as you could envisage, was actually increased by 10%, because I'm sure, like me, most of you are all working from home. This varied throughout the day. In general, I found that people were getting up later because there was no commute to work, no school, no college, and also so therefore you'll see the biggest delta in the morning, where generally you'll have quite a steep ramp traditionally from like say 6 o'clock on. This ramp was more elongated and we kind of went from like 7 to 9ish. Residential evening consumption also decreased because generally, I guess, people were eating earlier because they weren't commuting home from work and then putting on dinners. So and also going to bed earlier. So according to statistics, they'll say working day consumption actually increased almost 30% during work hours, during certain work hours rather. So virtual meetings, even the kids watching online, kids online schooling. So it's pretty easy to see why that increase happened. But as I mentioned, the overall demand actually decreased by 11%, and the majority of this demand came from hospitality, retail, construction, factories shut. I guess at this time, like, there was kind of a sentiment out there that we were kind of rallying around the flag, and we broadly did lockdown very well. We're quite a compliant society. Most folk were embracing lockdown, baking banana bread and such nonsense, and partaking in family Zoom quizzes. So you'll see how successful that lockdown was in terms of numbers. One point of note from our perspective, we would have various demand forecasting from third parties, and generally the demand forecasts are between day ahead forecasts and delivery intraday is very small. But I guess such uncharted territories that they never had modeled these sort of scenarios before, and we were seeing large variations in forecast demand versus actual demand when it transpired. But that was just our average April day during the first lockdown. The next slide now will look at our average October day. So this is when level 5 restrictions were introduced. So you'll see, just look at the graph, even compared to the last graph, there's a very small delta. It was nowhere near as restrictive. Schools were open, most construction continued, factories were open. If you look at a year-on-year basis, actually demand increased a lot across October compared to 2019. So that level 5 was introduced rather in October 21, and demands fell across the latter half of the month. I guess it kind of begs the question as to why demand is so robust, and broadly the general solution seems to be that the increased demand from data centers. Also, I guess the economy is going pretty strongly. As of December 7, there was a new all-island demand record of 6.9 gigawatts, up slightly from the old record. I guess what is interesting that it wasn't overly cold in this time. That old demand record was set in December 2010. I remember I was working in ESB at the time, and it was very, very heavy snow. So it just put into context the actual demand increase in the interim. As I mentioned there, a lot of this demand increase is put down to data centers. So there has obviously been an exponential increase in digital information. Online video boom has led to a surge in data traffic. I saw someone refer to data centers as a digital frontline. So in Dublin, we have hyperscale data centers for like Microsoft, Amazon, Google, Facebook. I guess for some people, beg the question, why Ireland for all these data centers? Why in Dublin? I saw BitPower, the data center specialist, broke down the 5 Ps, they called it. So people, we're an educated and native English speaking workforce. Policy, we've an open economy, pro-business approach. And also there is the benefit of a pretty low corporation tax. Pedigree, we've a strong track record with international pharmaceuticals, biotech and software. Power, we've a reliable electricity system. In terms of availability, price is obviously pretty high in that regard, but I think availability is the most important part. And finally, pipes. So we've a diverse Dublin fibre ring. So most of these data centers are actually located in the metropolitan Dublin area. I guess in that regard, it's not ideal given that it corresponds with our most dense population centre. And as of November 20th, there, according to BitPower, there are up to 834 operational data centres in Dublin. Obviously, these wouldn't be exporting the full volume of that power, but they have an average utilisation of about 45%. So this is just a little further detail on data centres. So according to BitPower, again, in Q4 19, in terms of emissions, the emissions attributed to data centers was 1.7% of Ireland's total emissions. This is expected to increase up to 2.2% at the height of it. You see the table there. This is just a quick data center capacity growth. So you see it's not quite exponential, but a pretty steep growth. So I think it's forecasted to get up to 1.6 gigawatts as of 2025. We're currently at just close to 900 megawatts. As I said, data centers are expected to use up to 29% of Ireland's total electricity use by 2025. So it's putting a bit of stress on the electricity system. As of late, I was reading that new data centers are being encouraged to build their own on-site generation. It'll be more carbon, isn't it? Because generally be gas units on site, but it has great benefits. 77% of these data centers in Ireland are hyperscalers. So you've like Amazon, Google, Microsoft, Facebook. Collectively, these are the largest companies in terms of purchase of renewable energy on the planet. Actually, Amazon have become the largest corporate purchaser of renewable energy in the world. Just up late, they developed a wind farm down in Cork. It was the first corporate PPA in the Irish sector, and they have a total capacity of 229 megawatts in development in Ireland. As I mentioned, this growth in the data centers served to dampen the impact of COVID on the Irish sector, the Irish demand curve. So just quickly contrasting the Irish market with the GB market, as I mentioned, Ireland fell 11% in total on the island during April, whereas GB was steeper than that. Demand fell by almost 20% on average across the day. I guess in terms of underlying differences in Ireland and GB, Ireland would have a very high tech sector, less industrialized, whereas GB would have a very high industrial and commercial consumption, accounting for 45% of total demand. Despite there would have been obviously a dramatic reduction in service and industries, but this is only partially offset by the higher residential load. One difference in the fuel mix in Ireland and GB is that in GB there's actually 13 gigawatts of solar energy installed. This is regarded as negative demand, so it's not, you wouldn't see in the same way you'd see like your average thermal asset. So the bottom graph there on the right is just, I think it's from a day in April when there was a very sunny day, high solar output. So you'll see here the morning ramp, but then you'll see kind of a big drop in the curve. That's where the solar generations kick in. They call the phenomenon called the duck curve because of the shape of the curve. Whereas if you look at the corresponding day for Ireland, it will just be kind of a flattish generation or demand profile from 10 or 11 o'clock through until 3 or 4 in the evening peak. In terms of residential usage in GB, similar to Ireland really. Residential demand saw 2 to 6% rise increase from Monday to Friday, and demand was weekend demand was largely unchanged. Just a quick slide on how our European counterparts did in terms of demand reductions. So Germany was least impacted during the initial lockdown. They have a high share of industrial demand related to the chemicals and medical supplies industries. If you see there from the graph above, you'll see Italy very badly impacted there in March. So we can recall how widespread the virus was there initially. Spain, and generally you can kind of draw a correlation between the level of lockdown and excess deaths in the country. Since the initial hard lockdown in Italy and Spain, they've rebounded slightly, but still they'll be below where they would be on from historical point of view. I just included a slide also on Chinese demand or response. So if you recall here from the last slide, you will see that the primary largest delta would have been during March and April when countries were locking down in Europe. If you look at China, obviously that's where the virus initiated from. they would have locked down a lot earlier than us. So you'll see here, their largest monthly delta would have been during February. And in March, April, they started to bounce back, and they're actually, by April, they were at pre-COVID-19 demand trends. So, you know, they had relative success in controlling the virus, and their buoyant economy is also reflected in these demand deltas. So that was just the last few slides of looking at purely at from a demand perspective, but now just look at how this impacted electricity prices. So if you recall, say Q1 2020, so this time last year, was a very windy quarter. I think wind load factors for Ireland are up around 40%, even 45, just would be higher than the seasonal average. So generally, wet and windy weather brings relatively high temperatures by winter perspective. You won't have any major cold. So it's kind of a perfect storm of combinations. So electricity prices, gas, carbon all plummeted during Q1. Then at the end of Q1, we had COVID restrictions. So on top of all these bearish indicators, you had demand also dropping off a cliff. This gave great issue for system operators in a lot of European countries because demand was so low. They face increased challenges to manage inertia in the system. So any country with high renewable capacity, so like Spain, Germany, Italy, Ireland, all struggled from a system operator perspective. One positive impact of this was that lower demand meant obviously prices low, and some thermal generation, so coal, ran less than what traditionally would have. For instance, GB went to record 67 days without coal. I think Republic of Ireland went 30 or 40 days, and they at one point didn't run. It's funny in that there's also a coal plant in Northern Ireland, Kilroot, and you wouldn't really hear much on that, and that it generates quite regularly, but it wouldn't really fall into Republic records or GB records, so it's no one really wants to claim it. The tables on the right hand side, so I just have heat maps of demand deltas and price deltas for Belgium, France, Great Britain, Ireland, Netherlands, and the rightmost column there is Sweden. The Swedish one is it's of interest in that they pursued a different strategy to most of Europe, and that is a type of herd immunity. That was their initial strategy. So if you look at their demand delta, look at their demand delta here, like it's negligible enough here for summertime, 0 - 2%. And it wasn't actually until Q4 that when they realized that their herd immunity strategy wasn't working, that you'll see the larger demand delta -12% per month. If you look at price, just from a pricing perspective, you'll see here Q1, as I mentioned, wet and windy prices were down up to 20-30 euro. With COVID demand, these price decreases continued into April and May, 25 euro delta year on year, which is pretty significant. There has been a rebound in prices over the last month, despite the decrease in demand again associated with the latest level of lockdowns. But even you'll see here, just looking at the table, that the Irish demand is an outlier amongst its European peers. Let's say bar 3 months, we're seeing net year-on-year gains in terms of demand, and as I mentioned, that's broadly down to demand centres. This graph here is just evolution of our Irish electricity prices across the last year. So you'll see here wet and windy Q1, bearish commodity complex prices in 20-30 euro. This is compounded by demand shock in April and May, so prices fell to nearly 25 euro. I guess one of the unintended consequences of the lockdown in April and May is that a lot of outages that were planned for these thermal gas and coal generators were actually postponed until later in the year, or even postponed full stop. And so that would have put a lot of pressure on the Q4 system, and that outages that were planned for during Q2 would have been pushed into Q3 and Q4. So you'll see that reflected in the increase in the pricing there on the graph. One other point is that because some of these outages were delayed, we're seeing actually higher force outage rate. So you've planned outages where the plant says we're going to do maintenance on certain aspects for a certain amount of time, and then you have force outages where it's just a unit trips and it can be out for unspecified length of time. Because of the number of outages, there was a number of amber alerts issued by EirGrid in the south and Sony in the north across the winter. This is due to tight margins, so generation supply margins. So generation is total availability on the system. That's wind plus unit availability, and supply margin is just our demand margins. And you'll see that these tight margins are reflected as prices increase towards €80 for January. Like at the height of the lockdown in May, they were down in the mid-20s, so that's quite the increase. So I just included here just one example of these tight price days. So generally, broadly during low wind times, Ireland Interconnector, so EV will be importing power from GB. However, during very cold weather periods rather, you'll have very high demand across Europe because they have a high proportion of electricity demand, or electric heating rather. So you'll see demand ramp up. So generally, they'll suck power out of UK, and in turn increase the power price in GB, so we can no longer depend on interconnector imports. So on this day in question, January 12th, you'll see the top left graph is just wind profile. So the day ahead wind was about a gigawatt. It's not, we've 5.6 gigawatt installed. 1 gigawatt isn't terribly low. And then that's the green line, and then the red line is what actually delivered. So because I mentioned cold weather in Europe, very high, this had a knock-on effect of very high prices in GB. So that meant both EWIC and Moyle were exporting to GB. Whitegate, a large CCGT in Cork of about 440 megawatts, was on force outage. That put further pressure on the Irish market. Wind forecasts, wind delivered actually under forecast, maybe about 500 megawatts at the evening peak. So because EWIC and Moyle were exporting, this put increased pressure on the system, and there was a risk of blackout. So therefore, Moyle had to issue an SO trade between Sony in the north and National Grid in the UK. So as I mentioned, Moyle Interconnector was meant to be exporting power. They had to buy this power back off GB. And consequently, that because GB prices were so high that day, they had to pay a price of €1,720 for that power that was meant to be export, that they were actually turning back around because there was a risk of blackout in Ireland. So you'll see here the graph on the right hand side. As I mentioned, we create primarily for wind farms. So we guarantee them a day ahead price for whatever their wind farm generates. So whatever the forecast error is, that's on the trader. That's just why we're paid a commission to trade it on their behalf. So you'll see here for the evening peak, prices were up, initially at a day ahead stage at €400 roughly. That's not unusual for winter time. What is unusual is actually where the imbalance price went. So as I mentioned, Moyle had to turn the flow back around because north is quite tight generation supply margins, and to turn this interconnector back around, they had to pay €720 per megawatt hour for each megawatt they imported. What that meant for us as energy traders or wind traders, in theory, generally you'll sell your day ahead wind profile at day ahead prices for your day ahead forecasts, because the actual forecasts, the actual wind delivered came significantly under the forecast. For this delta, we had to buy it in theory from the balancing market. So you're making a loss of nearly €1,300 megawatt hour there for each wind farm, for each megawatt that under delivered versus forecast. As a trader, you just have to kind of take these ones on the chin. It's as a cliche goes, if you can't take a punch, you don't become a boxer. So it's just bar having a crystal ball as how wind delivers. These you can expect to incur these losses. So I'll just give a quick overview then in terms of the All Ireland wind sector and how COVID impacted us as wind traders. So you'll see here the graph on the right is just installed wind in Ireland. So continuing from 1990 up to present. So as of December 20, there was 5.6 gigawatts of installed wind on the island. That's split by 4.3 for ROI and 1.3 NI. Majority of these wind farms will be on wind farm subsidies. So the subsidy in Ireland is the refit tariff. So this guarantees wind farms a price of close to €80 for the duration for 15 years of the contract. In the north, they've ROC's renewable obligation certificates, so they receive an additional £50 per ROC on top of their energy. We have very small volume installed solar in Ireland, about 200 megawatts in the north. And say that because it's such a small quantity, it doesn't really impact pricing too much. We've actually the highest penetration of onshore wind in Europe. So we go offshore, but in terms of onshore, we do very well. How COVID demand impacted us, I guess generally for wind traders, I look at it as 3 C's. So three C's rather: constraints, wind constraints, which are localized; curtailment, which is system-wide. I'll come back to both of them. And the final C then in terms of wind managers is cutout. So it's rare enough this occurs, might be 3 or 4 times a year. So when average wind speeds exceed 25 meters per second or 90 kilometers per hour for a few minutes, the wind farm will cut out. I say this is rare enough this happens. But generally, if you see a met-air and red wind warning, that's when there's a risk of cutout. So it's rare enough that it happens. So as I mentioned, the 3 C's: constraints, curtailment, cutout. So I'll just bring you through constraints and curtailment here quickly. So EirGrid sends dispatch down instructions to thermal generators, but also to wind solar farm for local security reasons. You'll have generation overloading transmission lines, cables, and transformers, resulting in these constraints. Constraints, as opposed to curtailment, are location specific and generally relate to areas of high renewable penetration. So that will be either, yourself, Donegal, southwest. You'll have a lot of wind farms. In the north, actually, when Moyle exports, it helps reduce constraints up there because it just takes extra pressure off the system. Graph on the right will show, so it's the orange line is install wind. So you'll see that increasing over the last few years from 2.5 gigs in 2011 up until nearly 6 gigs now, 2020. And the blue bars are just percentage constraints. You would have noticed due to this demand fall that there would have been an increase in these constraints during Q1 and Q2 during COVID. One impact of wind cannibalization is on price. So as I mentioned here, between 2013 and 2020, you'll see installed wind has more than doubled. 2020 was actually the highest megawatt hour generated in history for Irish wind. You'll see 13 terawatt hours generated there across the island. In column 4, you'll see the wind weighted capture price. So broadly speaking, with an increase in installed wind, therefore this will lead to a decrease in the wind capture price, because as more wind comes online, it'll actually decrease the price for that wind. So you'll see here on the rightmost column, you'll see wind price as a percentage of the base load from 2013 on. You'll see that trend broadly coming down towards 90% now from 96% in 2013. As I mentioned, the fourth column over, you'll see the wind weighted capture price. So back in 2013, these wind farms were achieving €63 per megawatt hour, assuming they had no subsidy. But as of 2020, due to the bearish indicators and factors that I mentioned previously, the wind weighted capture price was down to €34 megawatt hour. But luckily for majority of wind farms, they're still on a wind farm subsidy. As I say, there's a refit price which would bring them up to close to 80 euro per megawatt hour. I mean, last year there was an increase in the PSO levy because prices fell so much that the top up required to bring these wind parks up to 80 euro was actually larger than previous years. So that'll be reflected in your bill. The graph on the bottom right here is just, so as I mentioned, generally speaking, the wind price as a percentage of base load is about 89% currently. That was across 2019, 2020 is a little different. You'll see here that the red line is just the wind weighted price by month across the year. You'll see a big fall here during the lockdown period because with demand so low, it meant that wind blue had a negative impact on price, even more so than usual. So you'll see here during March, April, May, June, even more so April, May, June, that wind weighted capture price is actually down in the mid 70s at times. So if for these wind farms, merchant wind farms who were out of subsidy, that they were getting a lot less for their power than they previously would have been. As I mentioned here, one of the 3 C's is curtailment. So the curtailment occurrence when renewable are redispatched away from their initial position for system security reasons. So the SNSP, the system non-synchronous penetration. So that you'll see how that's calculated there. So it's the total wind and solar on the island plus imports divided by demand plus exports. So depending on which way the interconnectors are flowing. Generally speaking, as a rule of thumb, if wind is over 2.5 gigawatts on the island, you'll have exports. You will see lot larger curtailment when interconnectors are actually importing. That's when it's a lot more difficult for Air Grid to manage, because you'll have 900 megawatts above the line. That'll increase the SNSP. So in response to the binding national and European targets, Air Grid began a multi-year program, DS3, to deliver a secure, sustainable electricity system. So I've just tabulated there how SNSP has evolved over the years. So back in 2011, it was at 50%, but as of, I think, January 15th this year, Air Grid actually are trialing SNSP at 70%. I think that's, from best of my knowledge, that's the world first getting that high to allow that much wind on the system. And they have an intention to get up towards 95% SNSP by 2029, which would be very impressive. So just a quick slide here on system curtailment during COVID. So you can't really see it there because of the screens, but during Q1 and Q2 there was a large increase in curtailment. Low demand, high wind meant that more wind farms were bid off due to SNSP being reached. As I said, generally curtailment is condensed across periods of low demand and high wind, so nighttime, weekends, etc. During lockdown, there was a number of high wind, sunny weekends that therefore you would have seen high curtailment. What reduces curtailment is either interconnectors exporting, so EWIC Oil can export up to 900 megawatts now, and also Turlock Hill will be contributing to the net demand, so they can pump up to 280 megawatts for up to 8 hours. Actually, a former engineering classmate of mine, Billy Condon, works in down Turlock Hills. In terms of long term, you'll have the Celtic interconnector coming online. I think that's due to come online in 2027. I think last I heard. And also Greenlink. So Celtic interconnector is the interconnector between Ireland and France. So I think it's down from Cork, leaving Cork to somewhere in Cork to northwest France, and the Greenlink then, which is smaller, which is I think due to come online in 2026. So these exports will actually help reduce curtailment on the system because it has a net impact of increasing our demand. Also, the increased penetration of batteries on the system will help because they'll be during these low price periods, which are generally at night and high wind time and high wind periods, they'll be actually exporting for the grid to charge their battery. It should help reduce curtailment. I just included here an example from kind of peak lockdown, a kind of quite an extreme curtailment example. So the graph on the left is just wind. So the green line is the day ahead wind forecast. So as I mentioned, there's 5.6 gigawatts of wind installed in the island. So we had day ahead forecasts up towards touching 4.5 gigawatts. It was a weekend, so low demand. COVID weekend, very low demand. Sunny, very windy. GB prices are very weak. There is a kind of a mentality amongst Irish wind farmers that when the wind is blowing, that Ireland has a divine right to export power to GB, but that's just dependent on pricing. If power will flow to the most expensive area, in this scenario here, actually power was actually cheaper across GB that weekend, so we had imports on the interconnectors. So therefore, because the SNSB calculation, the imports are above the line, this dramatically increased curtailment across the weekend, such that nearly 50% of all available wind was dispatched down by EirGrid. So it was a busy weekend for them to manage it. On the right hand side, you'll just see the associated pricing with that sort of wind profile and demand profile. The red line is the day ahead price. You'll see it's generally a less volatile compared to the imbalance price. So the day ahead price actually averaged a minus €10 across the day. So if you wanted to generate, if you're a power station you want to generate, you literally have to pay the grid €10 per megawatt hour for every megawatt hour you generate. It's kind of hard to get my mind around that initially. Prices fell as low as minus 40 overnight. Obviously, all these refit wind, they don't really care where the price is day ahead, because they're going to receive a top up to the refit price. But it just gives an example of where extreme pricing can go. The blue line is the imbalance price. So if you hadn't traded your position day ahead and you had an imbalance of, say, actual wind versus forecast wind, you're going to pay this imbalance price for every megawatt you're out of balance. Just a quick slide here on carbon emissions during lockdown. So there's been a broad trend of emissions fall in Ireland. They fell by 4.5% in 2019 alone. Despite this, we still exceeded our EU emissions allocation by 6.9 million tonnes. One of the reasons for the fall in emissions over the last couple of years has been money point. It's been largely out of merit. So by out of merit, I mean is that essentially gas generators are in merit, and they'll be ones meeting the majority of our load. So money point's been out of merit, so there hasn't been emitting the usual. So between 1990 and 2019, or actually, I was surprised with this figure, that the average household consumption has increased by 139%. But if you look at our emissions from an electricity perspective, they actually decreased by 18%. So in terms of our plant, you have improved thermal efficiencies. A lot of the newer CCGs are very efficient, replacing older peat and oil-fired plants. Obviously, it increased renewables, increased interconnection, and these have contributed significantly to the reduction in the energy emissions. The only figure I have in terms of actual global emissions, I saw a report that mentioned they fell by 17% across April. This related to transport, industry, and electricity usage, so that's quite significant. As of now, Ireland are very unlikely to hit our 2020 target emission reductions. I don't think the figures finally have been published yet, but there are potential fines of up to 600 million per annum for missing these targets. So it's quite significant. These are just a couple of quick slides here on the electricity market outlook for the next few years. So in 2019, the Irish government published a climate action plan, and that set out an aim to have 70% renewable energy target by 2030. So how do we get there? So they're hoping to get up to 5 gigawatts of offshore renewable energy. Currently, we have 0. Up to 1.5 gig of solar, 8.2 of onshore wind capacity. So for ROI, we're currently at 4.3. Also, hoping that corporate PPAs contribute to this. There was, as mentioned, there was the first Amazon corporate PPA came online recently in Cork. Enhanced interconnection will help. From a trading perspective, all of this increased wind will make it more difficult to balance. So we'll most likely see our cost of balancing increasing with increased renewables. I just, on the bottom left there, you'll see the evolution of wind turbine heights and outputs over time. So I just included this quick image really that just shows you how much technology has developed over the last few years. You see here now by 2025, they're forecasting wind turbines of having up to 13 to 15 megawatt capacity. And contrast that back to 1995 when you're up, one megawatt capacity. So they're making massive strides there. In terms of our offshore wind, according to a recent IWEA developer survey, there are more than 16 gigawatts of offshore wind at some stage of planning. So that's along the east, south, and west coasts. Obviously, not all of them will gain planning permission, but if you consider Ireland's peak demand, as the island's peak demand rather is 6.9 gigawatts, having 16 gigawatts of offshore wind in planning is a pretty substantial. Single barrier, obviously, to get to this wind is the transition grid. Realistically, I think they do very well to have 3.5 gigawatts installed by 2030. There is a long-term target of having 30 gigawatts, and with the ability to export this to Europe, obviously that will require a lot more interconnection. The graph on the right is just a quick graph of IWEA's cumulative offshore wind forecast and the government 2030 target as set out in Climate Action Plan. So they want to get to 5 gigawatts. So I think IWEA foresee the first offshore wind farm coming online in 2026 and ramping up towards 5 gigawatts, hopefully, by 2030. So I mentioned previously that most current wind farms are on the REFIT subsidy. This has been discontinued and has been replaced by a renewable energy support scheme. So the first RES auction was held late last summer. A weighted average price 74 euro. There was 796 successful solar. So that's the first solar in ROI. So it's quite substantial. 796 megawatts. There was 260 unsuccessful, and also on top of that there was 479 megawatts of successful wind. I just pulled this down off the map on the left. I pulled off the ERC website. You'll see the successful location of these successful projects. So I always thought the sunny southeast was a bit of a myth, but you'll see here from the yellow icons, that's where all these solar farms are going to be located. The green is the wind. So you'll see here a quite dense solar generation in Cork, Waterford, Wexford, and up along the east coast. The middle graph then is just current operational wind farms. So you'll see here scattered from the northwest coast all the way down to west coast. You'll see how dense the wind farm penetration actually is along the west coast. Broadly speaking, solar is actually quite complementarity with wind, because generally during high pressure wind or weather systems, you'll have very little wind, but sun will be shining. So it'll be good to have that renewable mix, to have that solar to fall back on. And the table on the right is just a document released by Erova last week, just outlining successful ECP 2.1 grid applications. So it gives you an idea of what's being installed. So you'll see solar here, I think it was 1 gig. You can see there, wind up similar. But it gives you an idea of the evolving fuel mix. So very little from CCT traditional forms of generation. So it's all solar, wind, battery, even hybrids of wind and battery, solar battery, co-location of wind and solar. So it's quite positive, and it's a busy year ahead for EirGrid, or however long it takes to install them. And then this final slide here then is just the impact of decarbonisation on the electricity market. So it'll have three important factors. There's increasing power demand with the faster electrification of other sectors, particularly electric vehicles. There's increased intermittency associated with this continued rollout of wind and solar, decreasing conventional flexibility due to accelerated closure of power plants. I've included here two tables from an EirGrid report. So the first one is just expected closures of plants in Ireland over the next few years. This is just ROI. So you have 881, that's 29 megawatts, Fort Harbour's, Money Point, Loughreen, and West Offaly are gone now, and Eden Derry, and also in the north one have Kilroot closing sometime in 2020s, I believe. And on the table on the right then, just give the snapshot of what's planned. So you'll see how the impact of decarbonisation is pretty obvious here. So you're moving from kind of thermal generators to more flexible generators of battery storage, GTs. So storage is going to become an increasingly important kind of tool to be able to generate for wind farmers, to be able to bring their power to market. I've just included a small table there at the very bottom, which shows how much the price of lithium-ion battery pack has decreased over the last 10 years. So it's, I think, 89% fall in battery prices. So that's broadly very good, because during these high wind periods, ideally, the idea is that these batteries be charging, and then during low wind periods, they'll actually be discharging. So it'll provide increased flexibility to our grid. All right, that's me done for now. Thank you all for your attention, and any questions?